Hi there. Do you have your money invested with a financial advisor, or are you looking to put your money with a financial advisor? If so, there are 7 critical things that I want you to consider related to your money. My name is Steve Coughran. I'm the founder of Boosting Your Financial IQ, and in this episode, I'm going to share with you the questions that you must ask in order to protect your investments and maximize your returns. So let's go ahead and jump in. Okay, before we jump into the questions, let me provide you a little bit of context about financial advisors in the United States. 40% of Americans use a financial advisor. A lot of them are dissatisfied about the value they get from them. I'm not saying that financial advisors are bad. There are a lot of them that provide great value. I know a lot of financial advisors. A lot of them are my friends. They do a great job with their clients, but I want to point out a few things because you want to make sure that your investments are being protected and your best interests are also being protected as well. So here's the thing. There are over 300,000 financial advisors in the United States, but 90% of them are registered brokers. What this means is that a registered broker in the US does not have a fiduciary responsibility to act in your best interest. Now, that doesn't mean that they're not going to act in your best interest. I'm not saying that at all. A lot of them are going to act in your best interest, but it just means that they have no fiduciary responsibility by law to act in your best interest. And they earn money off fees and commissions based on the products that they're selling you. So you have to be very aware of this. Otherwise, your returns can erode very quickly, and this can really impact your retirement. Now, if they are not a broker, that means they are a registered independent advisor, but there are some nuances with that because you can be also duly registered as a broker. So I'm going to get into those things, but let's dive into the questions now. So starting with question number 1, you're going to want to ask them, are you an RIA, a registered independent advisor? And if they are, then that's good. We'll move to question number 2. If not, that means they are a broker. Now, like I said, brokers are not inherently bad. It just may mean that you're paying higher fees and ultimately eroding your returns on your retirement. It may be costing you a lot of money. All right, so ask them if they are an RIA. That's question number 1. So number 2, let's just say they are an RIA. You're going to want to ask them if they are a true fiduciary or if they're duly registered as a fiduciary and a broker. Okay, that's really critical because they may still be independent. They may still be an RIA, but there's a loophole where they can still be duly registered and act as a broker. So you may be wondering, Steve, how do I get this information? Well, just ask them point blank. Are you or your firm affiliated with a broker-dealer? You could also look on their website and there'll be a disclosure. It'll say something like securities are offered through blah, 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 blah. So look at that disclaimer on their website and you'll see whether or not they are affiliated with a broker-dealer. Now, if they are an independent but they're duly registered, just be careful because you may be paying higher fees than you think you really are. Now let's move on to question number 3. You want to ask them, does your firm offer proprietary mutual funds or separately managed accounts? You want the answer to be an emphatic no. Okay, here's the deal with proprietary funds. It's a way for advisors to keep the fees within the family. So oftentimes RIAs are selling a sister company's proprietary funds, and this is a way they keep the fees within the family. Okay, now here's the issue. If they are acting independently, but they're selling these proprietary funds, it may not be in your best interest because they may be putting you in products that are more expensive and they're keeping you locked into products that are based on what the sister company or the affiliated company is offering instead of truly acting in your best interest and putting you in investment vehicles that offer great returns at a lower fee. Now, when this is happening, RIAs and funds are operating under different names, so it's difficult to determine this by yourself. So you're going to want to ask them point blank this question. Are they selling these proprietary mutual funds or separately managed accounts? And remember, like I said, make sure that the answer is no. Because if the answer is yes, it just means that you are probably paying higher fees and you're being put in more expensive products. If you are okay with that, then keep moving forward. But if not, you want to be working with an advisor who's going to be putting you in great products, not just proprietary funds that are related or linked to another company. Number 4, you want to ask them, do you or your firm receive any type of third-party compensation for any of the investments that you are offering? Okay, this includes consulting fees or trips or gifts or anything that can be considered third-party compensation. You want to ask them straight up whether or not they receive this, because once again, you're trying to uncover whether or not they are truly independents, fiduciaries acting in your best interest. Number 5, you want to understand their approach to investing. So just ask them, what's their methodology? What's their framework? What's their strategy? What's their mentality when it comes to investing? If they believe that they can pick individual stocks and they can beat the market, okay, you're going to want to watch for that, because that's very, very difficult to do and sustain over a long period of time. Some people have been successful at doing it, but a lot of the advisors, trust me, they don't have the time nor the bandwidth to be successful at picking individual stocks. Or they may believe that they can time the market. So they take you out of the market, they put you in cash, they keep you on the sidelines, they put your money back in, they take it out, and they're all over the place. If they believe they can time the market, once again, that is really, really difficult to do, especially when you're managing multiple portfolios of multiple clients and you're trying to just manage all that. That's a huge task in itself. So ask them what their philosophy is on investments and make sure that it aligns with your core ideology and the beliefs that you have related to investing successfully in financial assets. Number 6, you're going to want to ask them, what other services do they offer beyond just managing your money? So do they offer tax help, legal assistance, estate planning, and other services related to just your overall financial well-being? So a company that can offer all of these is going to really provide you with a great competitive advantage, because they will be able to provide everything in-house. And there are a lot of strategies when it comes to taxes, and having somebody on staff who knows how taxes work in a sophisticated manner, especially if you're a business owner or you have options or equity ownership in a company, you're going to want to make sure that this is a part of your whole global team, your investment team. So ask them what other services they offer and make sure that it's comprehensive, because you don't want to just go with an independent who's really small, who doesn't have access to these resources, because you will be really limited there. So that's a very important question to get answered. Number 7, you want to ask them, where is my money going to be held? A fiduciary should always use a third-party custodian to hold your funds. Some examples of third-party custodians can be Fidelity, TD Ameritrade, or Charles Schwab. These are independent third-party custodians that will hold your money separately from the fiduciary. Here's the advantage of that. If you put it with this third-party custodian, if you ever get rid of your financial advisor, let's just say you switch to another financial advisor, you fire them or whatever it is, you don't have to go through the process of moving all your funds. Your funds stay with this third-party custodian, and it just makes it really seamless. So as a fiduciary acting in your best interest, one who is truly independent will hold your funds in this type of manner, and then you have access to your own money. This is really important because it'll help you to avoid being scammed by being put into like a Ponzi scheme or by some other type of financial shenanigans like with Madoff. So be aware of where your money is being placed, where it's being held, and this will help provide you the peace of mind that you need to move forward and to continue to build your path towards financial freedom. I hope these questions provided you with a nice framework to at least work from when you are considering hiring a financial advisor, or if you're working with an advisor. There's nothing wrong with reaching out to them and asking them these questions, even though your money is already put in place. So let's go through them one more time. Number 1, you want to ask them, are you an RIA? Are you an independent advisor? If the answer is yes, thumbs up, that's good. If the answer is no, that means they are a broker. And remember, 90% of financial advisors are brokers. They earn fees and commissions on the products that they sell you. They have no fiduciary responsibility. Doesn't mean that they're not going to act in your best interest. It just means that you do not have that protection that you would get from a fiduciary. Okay, so that's number 1. Number 2, if they are an RIA, make sure that they're not affiliated with a broker-dealer. This means that they're not duly registered, because otherwise they are an independent, they're registered as an independent, but they're also registered as a broker. So they can still give you independent advice, but they can also serve as a broker and then charge you these fees on these products and services. Number 3, remember, ask them if they sell just proprietary funds or if they can diversify your portfolio by putting you in other products outside of the products that are sold by a sister or affiliated company. So you want that complete independence. You want to be put in products that are charging you a low cost in returning the highest amounts of money possible. Number 4, ask them, do they receive any third-party compensation, any type of compensation, gifts, trips, consulting fees, anything related to the investments that they're offering. This will really help you to uncover their independence. Number 5, ask them what their philosophy is when it comes to investing. Remember, are they trying to beat the market? Are they trying to time the market? Just understand what their strategies are. Number 6, explore the whole ecosystem that they have to offer. Do they have tax partners or legal advice or estate planning as part of their whole package, their network? Make sure that they have these resources at their fingertips so you can have a comprehensive approach to your financial strategy. And number 7, you definitely want to understand, where is your money being held? I learned this the hard way. Not that I got scammed, but I put my money with a financial advisor when I was younger. I didn't understand who the custodian was. It's a complete pain to switch over. So make sure you understand where your money's being held. And just know, I'm not a financial advisor, okay? There's no incentive for me to share this video other than to help you to become more successful and to keep more of your money, which you should, right? So I'm just trying to be helpful. Like I said, there's nothing in it for me. I'm not a registered financial advisor. This is for educational purposes only. But make sure you do your homework, your due diligence, because I've made mistakes in the past and it really cost me, and it cost me in high fees, okay? And it cost me in bad tax planning strategies. So make sure that you are asking the right questions, and then you will be feeling more confident and more comfortable in your approach to investing and in your approach to building this retirement to give you financial freedom and security. So if you got value out of this video, it would mean the world to me if you hit that like button. Also leave your comments below. I always love hearing your feedback. If you are not a member of the Boosting Your Financial IQ community, you could go to byfiq.com and register there for free and get access to a lot of great resources. And finally, if you haven't subscribed to this channel, hit that subscribe button so you are notified every time a new episode like this gets dropped. Thanks for joining me today. Keep on rocking it out there with Boosting Your Financial IQ. Hey there, thanks for watching this video. I hope you got value out of it. If you did, it would mean the world to me if you hit that like button. Also, leave your comments below so I can capture your feedback and know what kind of content you want to hear about in the future. If you are already a member of the Boosting Your Financial IQ community, thank you for joining and thank you for being a part of this great effort. If not, you could go to byfiq.com to sign up for your free membership today. Also, make sure you subscribe to this channel so you get notified every time a new episode like this gets dropped. In the meantime, take care.